Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Taking a look at the recent bull run in US dollar coming off of a hotter than expected PPI inflation rate. Strong US data once again causing a US dollar resurgence. Euro, Aussie, and a number of major currencies globally falling relative to the US dollar in light of this recent strong US data. Let's take a look at the price action, starting out with Euro, one of the hardest hit of the major pairs, breaks back below 109, which is recently expensive. It's a high level for 2024 and for the last couple of years. If you've been trading Euro dollar, you've seen this Euro get up to 110, 111, 112. Those have been really around the highs, and we're right back up there near 110. And then the higher than expected U.S. inflation data comes out. U.S. dollar sees some strength on what could be higher for longer U.S. interest rates. We'll get to that in a second. But yeah, a break back below 109. And now traders wondering, will it fall back to 107, 106, the recent lows in this pair, or is this a one-off and they'll bounce back and see the Euro strength that we have seen in recent weeks? Only time will tell, but yeah, in the most recent day, seeing Euro weakness back below 109. Similar for Australian dollar. As you can see, same timeline right off of the PPI announcement. It was a big move lower on the number, and then just continuation throughout the U.S. trading session of Euro and Aussie and some other major pairs we'll take a look at in a second to the downside. And for Aussie, it was 66 cents that the market broke back below. And you'll remember a week ago, Aussie fighting up to above 66 cents. It looked like it might be ready to finally take a leg higher, as this Australian dollar has been one of the weakest of the major currencies in recent years of trading. If you go back pre-pandemic, more than 5 years ago, Australian dollar was trading in the 70 handle, 80 handle. If you go back 10 years, even 90 cent handle against US dollar, and now fighting to get back close to 70 cents. And once again, anytime it's gotten up to 66, 67, moving lower. The recent lows in this market have been around 62 to 64 cents. Similar to that Euro, we'll see if the market is traveling back down to those lows, or if this is just a one-off blip on the way to maybe 70 cents and beyond. Now let's take a look at what's been causing this quite volatile price action. The PPI inflation, which hasn't been nearly as big of a deal as CPI or PCE, numbers that are more on the consumer side of inflation measures, whereas PPI is a producer inflation measure. But out of nowhere, this producer price index inflation rate comes in 0.5% higher than expected, which is a pretty big outperforming number, especially when they were expecting it around 1%. And you can see, going back to September, this PPI has been right there at 1%. And if you know anything about the central bank, the Fed, and inflation rates, you'll know that they're targeting right now 2% inflation. And so you might say, oh, well, it's been below 2% now for several months. And the CPI and PCE, which are more consumer side inflation measures, they've been moving down closer to 2%. But the last thing that the Fed or the U.S. Citizens at large would want when we're thinking that interest rates might be moving lower is now it's not CPI or PCE. Now we got to worry about PPI. The producer side of inflation is rearing its ugly head. Not above that 2% target yet, but 0.5% higher than expected is definitely spooking a few people here as we look towards potential rate cuts in 2024. We'll see what those odds are looking like in just a second, but just to hammer home the US dollar strength that we're seeing off of this higher than expected inflation number, you look across the board. I mean, everything from Aussie and Euro, which we covered, to pound, Canadian dollar, Japanese yen. US dollar is up after this number across every currency that we have here on our board, as the idea being higher than expected inflation. Well, strong data in the U.S. is going to correlate to interest rates that are already above 5%, maybe staying above 5% for longer than anticipated, and relative to a Australia or a Euro area where they might be cutting interest rates globally. A lot of the central banks talking about cutting interest rates or normalizing them lower from their highs because inflation has moved lower globally. If the U.S. is still showing some strong data, then they might be one of the last to cut rates, and that might mean some further U.S. dollar strength just when you thought it was over here in 2024, resurging once again. And let's finish with the current odds of rate cuts. And it has gotten pretty rough for those on the side of rate cuts coming in May, especially down to 4% chance of a rate cut in the May meeting. This was in the last month, I believe, as high as 20%, which still isn't, overwhelming. It's not 50-50 even, but to go from, a relative chance of, 15, 20, 25% in that range to now below 5%, that's pretty rough. And then going out to June, those likelihoods were closer to 75% chance of a cut by the June meeting, and now this is down to 63%. So still, it's the favorite outcome is a cut by the June meeting, but those probabilities are starting to slip, especially in light of this higher than expected PPI inflation rate. We'll see where it all goes from here. We've got the March FOMC coming up. We've got more inflation coming up in the U.S. between now and that May meeting and that June meeting. But we'll see if the U.S. dollar resurgence here is a blip on the radar or is going to continue, especially when we look at inflation and central bank meetings abroad. Got a lot of stuff on the schedule that will likely move this U.S. dollar around. Thanks for watching.